Hey, welcome back for another weekly review. It's been a really busy week out there with tons of economic data coming out. We've heard a lot of news headlines. I'm sure you've seen a bunch of numbers and kind of break down what those mean, because we've seen CPI data was obviously the big point of this week. We've seen PPI data, retail sales. I mean, there's all these different numbers out there, and this market seems to be very resilient to a lot of them. So what does it all mean?
Yeah, first of all, let's talk about why it matters, right? So the inflationary data that we're getting out there, whether it's the CPI, the PPI, or even to an extent jobs numbers, whether it's non-farm payrolls or jobless claims, they all seem to indicate, at least thus far, that we still have a very strong and resilient economy. Now, what investors seem to kind of infer from that is because it's strong, because it's so strong, maybe the Fed won't be so quick to cut rates.
Because the Fed might be worried about inflation with the strong economy.
That's correct.
Okay.
If you recall from the end of the year when Jerome Powell, came center stage and basically said that they were looking at 3 rate cuts for 2024, that's what gave the market a real excuse at the end of the year, the last 6 weeks or so, to shoot up to highs. Now that seems to be in question. But here's what's interesting, Logan, is that if you look at the market, every time that we get a inflationary report, or I should say a report that insinuates inflation or that the inflation's hanging around, the initial reaction is a sell-off, right? So Tuesday, we saw a pretty significant sell-off on the CPI. In fact, at one point, the Dow was off over 700 points, ended down 500 for the day. And you would think, oh, my goodness, here we are. It's time to have a real meaningful pullback. 2 days later,
Right back.
we were right back at highs.
Right.
It's fascinating. Now, when you look under the hood, what I really like is we got to get a little granular here, is when you look under the hood of what's moving, the things that are really sensitive to interest rate moves, they seem to have gotten hit the hardest. So the small capital stocks, mid caps, even some international and emergings, which is going to be influenced by currencies and so forth. But however, they have bounced back the strongest even more. So what I mean by that is money seems to fly out of those, right? There's a frantic pace. Oh, get out of this. The rates are still going to stay high. Oh, my goodness. And it's almost as if you watch it very carefully, as we do, it's almost as if prudent investors who are patient, they're watching that and they're going, thank you very much.
Right.
This is exactly what we wanted. We wanted to add more exposure. So that's, I find, very fascinating because, going back to our 4 themes that we talked about for this year, one of them was volatility. We're going to see that. We're going to continue to see shakes in the market. The second was areas, in our opinion, that are the most attractive are the ones that are actually more tied to interest rates, small companies. Why are small companies so tied to interest rates? Because a lot of them have to finance their activities. They're reliant on debt, et cetera. Also, in the small group of companies, there's a lot of regional and medium-sized banks, which are very dependent upon interest rates. So we get these pullbacks. They're short, but ultimately they don't last long, and they ultimately move higher. Now, I will say, this is the last thing I'll say on this, we're overdue for a bigger pullback. I mean, we just are. It's been great. The start of the year has been good. It's nice to finally see small caps, emergings, other areas do well, not just the big caps. But, I mean, I think we're going to get pullbacks, and I wouldn't at all be surprised to see a more meaningful pullback soon.
Not just the one-day thing that we've seen where we've had a sell-off. So,
and if we don't, this is, I'm going to stress this, if we don't get a meaningful pullback, ironically, we'll become a little bit more concerned. Because if things just go straight up without digestion, without this kind of pullback, uncertainty, the ability to create fear again, then we'll start to think, okay, the carnal spirits are a little crazy. We're starting to get a little bubblicious, and we might be a little bit more defensive going forward. So pullbacks are not terrible.
Great. Well, in addition to all this talk of the markets that we have coming out, we also have a webinar next week, and I want to make sure you guys know about that. We're super excited about that. The webinar is going to be all things planning, so we're going to dive deep into our financial planning process. We're going to show you all a plan, so whether you're a current client or you've never done a plan with us before, we're going to really dive into that and show some of the different strategies and things we do with planning. What things are we going to talk about?
Well, I want to stress, if you haven't watched the Pete Alberti interview, so I've gotten a lot of great comments on that, and I got a lot of comments like, oh, you do Medicare planning too? And I'm like, well, we don't sell insurance, but your income and tax situation will impact your Medicare premiums. It all goes together.
Right.
So we're trying to do a better job articulating what we do. Allie is intelligent, very, very wise as a young CPA, but I want you to understand we use the CPA for tax planning. Like we do all these different things, and I don't think we've done a good enough job relaying that to our clients and people out there. So we're trying to do that with an in-depth look. Really, I mean, we're going to pull back the covers and really show you what a plan looks like. We're going to go through it. Won't be the most exciting webinar, but if you've ever wanted to get in the weeds with a plan, real financial retirement plan, tax strategies, estate planning, you name it, this is the webinar for you. Thursday the 22nd at 8 p.m.
7 p.m.
7 p.m.
Next Thursday, 7 p.m. We'll see you guys there. Have a great week.